Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the earnings report of Brookfield Asset Management and RioCan companies. Just as a heads up, I have a stake as a shareholder in both companies. BAM is my largest Canadian position and RioCan is a small position for me at the moment, which I try to slowly build a full position in. I recently did a detailed stock analysis of BAM stocks or Brookfield stock, and in that video I mentioned Brookfield is undervalued and the fair value of the stock is around 78 Canadian dollar. Today, after the earnings report, the company share price jumped almost 9% at the time of recording this video, and now is trading close to its fair value. Congratulations to anybody who bought the dip on BAM stock in the last couple of weeks or after watching the previous video of mine. With that being said, let's start the video. Okay, so let's start with Brookfield Asset Management earnings report. This was an amazing earnings report. BAM reported 27% growth in revenue quarter over quarter, comparing the last 3 months of 2020 and 2021, and 15% year over year growth in revenue. They reported a net income or profit growth of 65% quarter over quarter. They also reported a 45% year over year growth in funds from operations. And finally, their distributable earnings increased significantly in this quarter. They also increased their dividends by almost 8%, which is all in all awesome news and super strong growth numbers for this company. As the result, shares of Brookfield Asset Management surging this morning, and the company is now traded at its all-time high, basically price tank. There are also news about spinning off their asset management division, which we should see how it affects the company if we can find out about the details in the future. Again, congrats to anybody who bought the dip of Brookfield Asset Management in the past couple of weeks. Next, we had a RioCan earnings report. It wasn't as stellar as Brookfield Asset Management, but RioCan have had a good earnings report as well. Their funds from operation per unit increased by almost 18% quarter over quarter, but it was almost flat year over year. They increased occupancy of their units by almost 97%, and the rent collection from their units slightly to almost 98%. They also reduced their total debts, which is good news. They increased their monthly dividend or distributions by 6.25%, and they predict to be able to grow their FFO per share by 5 to 7% year over year with a safe 55% to 65% payout ratio in the future. The shares of RioCan raised by almost 4% today as a result of increase in the distributions and relatively good earnings report. Congrats to RioCan shareholders as well. I hope you enjoyed the video. If you enjoyed this video and my coverage of earnings report of Canadian companies, please leave a comment and let me know what stock you'd like me to review next. And please consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.